Joining us now on the Megacast is Michael Greiner from Oakland University, associate professor of marketing in their school of business administration. Sorry, associate professor of management, not marketing, in their school of business administration. Joining us on today's edition of the Megacast, Michael, thanks for joining us today.
It's great to be back. Happy Friday, Tyler.
Yeah, happy Friday to you as well. Off to an interesting start, definitely today. Looking at the markets now, we're heading into the late October, early November part of the year, and that's where people are literally looking to do their early holiday shopping. And so the market's definitely affecting shopping for the holidays this year, definitely going to have a big impact on both the stores, the supply, as well as consumers. Tell us about the impacts that they're seeing already, and the projections that you're hearing from the markets for this holiday season.
For sure. Yeah. Well, we've been seeing now for more than a month already increases in holiday shopping starting earlier than typically had been expected. Usually kind of the traditional start of the holiday shopping season was always Black Friday, the Friday after Thanksgiving. But for the past few years, that's really been moving up as different retailers have kind of engaged in a bit of an arms race, to try to capture more of that holiday shopping crowd. You have to remember, for most retailers, more than half of the revenue that they get per year comes in that compact holiday shopping period. And in fact, part of the reason that they refer to that Friday after Thanksgiving as Black Friday is that that's typically the day that retailers go from being in the red, losing money for the year, to being in the black, making money for the year. So holiday shopping and the impact that it has on retailers just can't be overemphasized. Now, so on the one hand, you have this long-term trend. On the second hand, then you've got a couple of other more short-term trends. For example, with the whole pandemic situation, you've had a couple things happen. One is that while people were under the lockdowns, they were buying more goods. The classic case is, of course, the Peloton workout machines, where people wanted to have them to work out at home rather than going out to the gym, many of which were closed down. Now that the lockdowns are mostly over, people want to be able to go back out to the gyms. And we're seeing a big shift now from the purchase of goods over to the purchase of services in our economy. Now, that is kind of a bit of a surprise to a lot of these retailers who were kind of surprised by the shift to goods in the first place. So they bulked up and bought a whole bunch of goods. And we remember those shortages last year that people ran into when they went Christmas shopping. And now what we're finding is that retailers have so many goods on hand that they have too much inventory in some cases. So you see a lot of them trying to do early sales to try to thin up that inventory, which again is one more thing that's encouraging people to shop early. Then, in addition to that, you've got where, because of last year, people were kind of shocked by the shortages that many of these stores had. And they don't want to find themselves in the same situation again this year, where they're struggling to buy all the Christmas presents that they have for all their relatives. And so you see a lot of people, even though it appears that the supply chain issues are worked out, a lot of people still are kind of gun shy. And so they're going out and trying to make sure that they complete that Christmas list early, so that they avoid any kind of crisis like they had last year. And then the final big piece of it, of course, is inflation, which, we just can't escape from. And the bottom line is $1 today with inflation is worth more than $1 tomorrow. So if you're able to buy your goods now, you're literally getting them for less money than you'd be buying them if you bought them tomorrow. So it's literally a rational decision for American consumers to buy stuff early. And as a result, you see people running around and trying to get their Christmas shopping done a lot earlier than they typically would. So you kind of see a bunch of things coming together at once, really pushing that narrative.
We're joined by Michael Greiner from Oakland University on today's edition of the Megacast. And in terms of supplies, you mentioned that many of these retailers have bought a lot of their goods in bulk in anticipation for the holiday season, especially given the circumstances of the market over the last 6 months to a year. So that would present that, generally speaking, they're going to have enough of the supply to get through the holiday season. That being said, in so many industries across so many sub-industries across retail, we have been seeing particularly that supplies have been an issue, and that's part of the reason why we've had the rise in prices. So where is that balance in the market going into a holiday season where people are buying? Is there potential that many businesses are going to run out of products?
Well, that's the interesting thing about the whole crisis with supply and inflation and everything, which is that it's not uniformly felt across the economy. There are, as you look at each industry, you can see how each one has separately been impacted by inflation and these supply chain issues. A great example of that is actually the auto industry, where there's this incredibly pent up demand. And because of the fact that some of the automakers have had trouble getting access to the semiconductors that they need to be able to build cars. I mean, we have to remember modern cars are basically big computers on wheels. So as a result of that, there's this pent up demand for vehicles, and the as a result, the auto manufacturers are really struggling to fill the demand, and there's an expectation that that's going to continue to go up. On the other hand, though, you have Peloton, which we talked about earlier, and they're actually going through layoffs as a result of the fact that the huge demand that they saw early on is suddenly dropping off the cliff. So it really varies from industry to industry, and I think the key thing that is kind of the lesson that most consumers need to take is that, and this is kind of speaks to the whole shopping early thing, which is look for the deals, and when you see a deal, take advantage of it. Waiting for some better deal or thinking that the supply might come up by the time we get to Christmas is not necessarily a good strategy in this Christmas season. And so, really, what people should be looking for is what deals they can secure as quickly as possible, and maybe even shifting some of the planning that they made in terms of what they were going to buy for different people.
And Michael, across the pond in the United Kingdom, some really interesting dynamics there of late that have certainly been impacting their economy. We talked about that last week, and now the big news over the last 24 hours has been the resignation of Prime Minister Liz Truss after less than 50 days in office. In an already tumultuous economic situation in Great Britain, that is possibly another catalyst for a little bit more chaos, I would believe, with another change of leadership, and the second in less than 100 days, the second in less than 50 days in Great Britain. How could that potentially affect markets going forward here in the US, given that relationship between the United States and Great Britain?
Yeah, that's a great question. And just as an aside here, it's really almost laughable to see how completely this administration completely, flubbed this
Yeah.
whole transition. Especially coming after Boris Johnson, who many viewed as, I don't know, kind of a buffoon, to see how Liz Truss could completely screw things up so completely is really amazing. And I love that there's a newspaper in Britain who actually create a live feed of a lettuce head, because they made a prediction that Liz Truss would not last as long as a head of lettuce from the store. And as it turns out, the lettuce head survived longer than Liz Truss. So it really is going to be a classic case, I think, studied for many years of a complete political meltdown that was really caused by themselves and their own mistakes. But that being said, it's easy to laugh about these things and to kind of point fingers across the pond. But what we forget about the fact that our economy is so heavily dependent on finance. I mean, America is the finance capital of the world. It's one of our largest exports, even though it's not really included in a lot of our export figures, and one of the largest employers in the United States. And it's what drives some of our largest municipalities, obviously. I mean, New York is basically the finance capital of the world, and Detroit's not far behind. I mean, we have a lot of finance going on here as well. So the reality is that as these machinations are going on in England, and as it's kind of shifted, say, some investors from perhaps betting on American securities, they might be betting on British securities because maybe there's more risk there, or maybe they think that now things are going to bounce back. And it just creates that level of uncertainty in the markets that is really what businesses hate and what finance hates. Um, Britain has been going through very high inflation, much higher than we've had here. In fact, I think the last inflation report for Britain was 10.1%, which, boy, I'll tell you, if that were going on here, people would really be sweating bullets. So as a result of that, I mean, that level of uncertainty, I think, is bound to create some concern among all the finance markets around the world. And we've talked before about the collapse of the British pound relative to the American dollar. We've talked before about the impact of essentially the increases in the inflation rate and in the interest rates in Britain. But the biggest issue I see going forward is that you have basically the fifth largest economy in the world right now, and they're going through chaos. And that kind of uncertainty is always going to be something that investors don't like.
We're joined by Michael Greiner, Assistant Professor of Management from Oakland University, on today's edition of the Megacast. More information on Oakland University programs can be found at oakland.edu. Oakland.edu for those programs. Some good news that is coming out of the inflation situation. Some positive effects have certainly been had on Social Security, as well as on our potential tax refunds, tax deductions going forward as a result of what we're experiencing right now. Can you tell us about that and how, particularly Social Security, is seeing a little bit of a bump up as a result of inflation?
Yeah, more than a little bit of a bump up, actually. I believe it's 8.7% off the top of my head, which is actually the highest increase we've had in Social Security since I think the early 1980s. So it's a very substantial increase. And this is on top of the fact that there's actually no increase in essentially the premiums that seniors need to pay for Medicare. I mean, many folks out there who do get Social Security are aware of that deduction that is taken out of it for their Medicare, and that's not going up. So they're going to see a very substantial increase in their Social Security checks going forward. In fact, I had seen that on average, most people are going to expect to see at least $140 a month increase. So you're talking a pretty substantial increase here. Now, a lot of that is driven by the fact that we have had this inflation and that there are essentially what we call these automatic adjustments within how these different how these different programs are handled, where they just kind of look at the statistics that are available, and then based upon that, these numbers automatically adjust. And so that's, I think, what we're seeing largely with Social Security, and for that matter, with the tax returns, because with when people are filing their tax returns this year, one big surprise to I think a lot of people is going to be that the personal deduction, the amount of money that you basically get to take off right off the top for yourself and your family, that's going up quite dramatically. I believe that's going up by 7%. So that's going to mean more money than left in people's pockets. So these are all kind of good news stories that come out of inflation. And that's the irony here, which is that any situation you have here, especially in an economy as large as the United States, has both good sides to it and bad sides to it. For example, with oil prices, everybody hates the fact that gas prices had gone up, although now they're going down a little bit again. But yet the United States is a major producer of oil. So higher oil prices actually help sections of our economy. At the same time, lower oil prices. People talk about the fact that American oil production has gone down. Well, a big part of the reason that that's the case is because of the fact that there has been this decline in the price of oil overall. And so there's been less incentive essentially for these oil producers to go out there and produce more oil. Same thing with inflation. On the one hand, inflation is annoying because, yeah, you have to pay more when you go shopping. But yet, by the same token, people's wages go up, Social Security goes up. As we can see, the tax deductions are going up, and at the same time, the biggest impact, the biggest party that suffers as a result of inflation, actually are the banks, where what they've done is that they've lent you money at a certain interest rate, and the real interest rate is essentially the interest rate minus the amount of inflation. Well, given the fact that inflation is so high right now, people actually are paying less in their mortgages and less in their car loans, for example, than they were in the past. Bad news for the banks, good news for consumers. But again, it's not the type of story that you see every day because you're not every day being reminded of it when you see the gas prices rising, for example. But it goes to show that all these things are really double-edged swords. And the hope is, I think, among most people that we're going to stabilize things, because as I described to my students, the biggest thing that business hates is risk and uncertainty. And this is the type of risk and uncertainty that you just can't be prepared for. You know, they try to take out inflation to mitigate, insurance to mitigate that. They try to hedge their different investments to try to mitigate that. But when this type of thing is going on with the global economy, you just can't hedge against that. And so that kind of uncertainty really is what's being a drag on the economy right now.
We'll always have more information on this each and every week. Fridays are market talks with Michael Greiner on the Megacast. Michael, thanks so much for joining us.
Great to be here. Have a great weekend, Tyler.